Hello, everybody, and welcome to yet another episode of the Uncut Podcast. We're going to cut straight to the chase because we really have a lot of things to discuss here. Me and Joe really want to talk about the current situation with the economy in the United States and the whole tariff situation in the United States with Donald Trump and what that can potentially mean for the economy, not only of the United States, but of the globe and also the stock markets, which are in the headlines today 24/7. So, without any further ado, let's jump straight into this discussion.
And now the Uncut Podcast presented by Joe and Theo.
All right, so Joe, welcome to the show. Welcome on board, man. This has been a hell of a like a hell of a week, essentially. If you're remotely following the markets, it's been you don't know where to go. You don't know if the market's going up, if we're crashing, if we're entering the Great Depression of 2025, repeating 1929, if all of this is just a negotiating tactic from Trump. But I think before we even start discussing that, there's a couple of things and terms that we need to clarify for people before we get into the more deep discussion. And I really want to start very quickly to explain what a tariff really is. So, and I think you can step in on this too if you want to kind of share your thoughts. A lot of people think that a tariff is essentially a tax on the person who's sending the product across the border. It's not. What the system of a tariff does, well, tariffs were essentially put in place for two things. One, to make foreign products more expensive, right? To essentially facilitate or push consumers to buy local, so to speak. And secondly, to actually, this is the one thing that Trump is right on, to create income for the government. And the earliest case of that situation was actually, I think, way, way back in the history of the United States when they started taxing and putting tariffs on British products, essentially, when they were trying to separate as a colony, right? So tariffs are used for that thing. But the idea and the notion that the person who's sending the import is paying the tax is false. The person who's getting hit with the tariff the most is the importer of the country. Now, best way to explain this, say that I'm established in the United States and I'm selling, give you a very simple example, plastic cups. And I'm importing these plastic cups from China, but these things right now are getting hit with, say, an 100% tariff. I'm the one who's getting hit with that doubling in price. Most often than not, what ends up happening is that doubling in price, I pass it on to the consumer. I don't absorb it. So instead of selling my cup for $2, I now sell it for 5 because I add my profit margin on top of that $2 increase as well. So from my perspective, that's what tariffs are. I want to get also your perspective before we move on to another topic which is in the headlines right now that we need to explain.
No, you pretty much. I mean, it's pretty much a definition of a tariff. Most of the time, it hits it hurts the consumer more than it doesn't, and the whole purpose of it, right, is that you maybe want to promote purchasing in house opposed to purchasing foreign made products, which is something that I think most countries would love to encourage. The only issue is that nowadays, with everything being globalized the way it is that it's easier to get done, right? So the tariff perspective usually backfires quite a bit, and we saw it this week. And I know you want to. Maybe it's just best if we just peel the band-aid off and go straight into the subject matter at this point.
Maybe.
I think that's what the whole thing. If anybody listening, this is kind of what they're looking for. I don't think they need a history lesson on the tariff expedition, but I mean, you pretty much hit the nail on the head there when you said what you said. But we saw it this past week. It doesn't function in a global economy like it does today. Maybe 50 years ago, 100 years ago, it would work because the world was still not as connected
Mhm.
as it is today, right? Most means of transportation was boat, and that was an extended period of time. Air travel wasn't as predominant as it is today and was still relatively new back then when if we look at how Trump is basically running his tariff strategy, right? He's looking at a lot of presidents that were pre World War II, and you look at that and you kind of go, okay, like back then it would make sense, right? Easier to make stuff in home. You can probably do it for cheaper as well back then too, because you had other, there was no labor companies, labor unions. All these stuff came later on, and in today's market, it's not as it should be. I know tariffs are put now in place because again, people don't want to purchase certain goods from another country, right? You want to avoid, um, your population to purchase those goods. You want them to buy production made within your own country to also bolster your GDP and all this type of stuff. The issue is that sometimes the product made in house in your own country is more cost than the product made, we'll say China in this case, right? I think a lot of Americans realize that and quickly adjusted to it, and that's why we saw what we saw over the course of this weekend.
Yeah, and I completely agree. Well, and at the end of the day, that's kind of the whole situation that's going on right now. And we can talk about the markets and the economy at the same time. The whole problem and the whole concern is the way that the tariffs were imposed and the magnitude of the tariffs that are being imposed are extremely, extremely dangerous for the economy. Because, as you correctly said, the way the world is connected today, the way, for example, and the best example because it's in the media so much, is Apple, for example. To get your Apple phone that you buy at an Apple store, whether it be in Montreal or in New York, that thing gets its semiconductor parts from Taiwan Semiconductors, right? It gets its screens from Korea and Samsung, most probably, right? Because they share screens. Then this thing gets assembled in China, shipped over to the US, and then gets sold. And all of that is built into the price you're currently paying, which, again, if you look at the prices of an iPhone, they're not, the cheapest phones on the market either, right? So when you have a president that came out on April 4th, the so-called Liberation Day, and I think that was the day, right? It was April 4th, if I'm not
Yeah,
mistaken.
it was
And he comes
earlier
out and he
last week.
starts slapping Taiwan with 45%, Korea with 30%, 35%, China with 50 plus percent at the first round, right?
Fucking
Now,
penguins with 3%. Yeah, penguins.
Penguins with 3% for some reason, because Penguins pissed them off as well. But when you're Apple and your entire supply chain, which has resulted in your product being worth, say, 1,000 USD, I'm just giving a number, right? And now you're looking at an average across the board increase of 50%. Now you're getting into a position where you might not be able to sell to consumers anymore. And that negatively affects, especially in the stock market, your revenue projections, your profitability, which also then reels its head around into unemployment. Because companies have two choices. They're all going to take that money in and they're going to get hit with that price increase and pass it on to the consumer, or they're going to cut production, or they're going to fire people. All they're going to do are three. And that's the situation that started in April 4th. And that's why, if you look at the markets when all this started off, the markets started to tumble very, very, very quickly, right? To add fuel to the fire, when you do something like this, you're going to have other countries which are going to put reciprocal tariffs on again. They're going to fight again. And the best example we've seen of this, we've had the situation in history before, was with Smoot-Hawley in 1929. And we know what that caused. If you ever studied economics, if you ever studied finance, that caused the Great Depression of 1929. That's what caused the markets to tumble very, very quickly. However, the past couple of weeks have been extremely, and I wouldn't even say the past couple of weeks, I would literally say last week, have been extremely volatile. On Wednesday, this guy basically, who came out initially on April 4th and said, I'm putting tariffs, I'm not moving them, fuck everybody, this is what's happening, came out and said, I'm putting a pause for 90 days on all the reciprocal tariffs, and I'm only keeping the baseline 10, sending markets up almost 10, 11%. Come forward to this weekend, back and forth, back and forth. Essentially, tech companies are no longer subject to the 145% tariff, reciprocal tariff on China, but are now magically being tariffed for fentanyl at 20%. Still, 20% is high, but way lower than 145. So if you lay out the groundwork, you're seeing this president starting to cave on a lot of essentially the tariff promises that he put in, and he's reversing them. And I think there's only one reason, and I want to see your opinion on this as well. In my opinion, the only reason why he started backing off was of what was happening in the bonds market. If you look at what yields were doing last week, they spiked to, I believe, 4.7% for the 10-year maturity bond, which is bad. So he saw that and essentially went, oh, fuck, I might be causing a bigger problem. Or maybe he didn't even say it. Maybe it was his Treasury Secretary Besant that looks at the bond market very carefully, and the Federal Open Market Committee basically stepped in and said, you have to stop, because you might be pushing the entire US into a liquidity crisis, which is another conversation that I want to discuss altogether. But I want to get your thoughts on this past literal week that's been happening. What are your thoughts on this? Like, what do you think is happening?
Well, my thoughts are pretty simple. I know you explained a lot about what's going on in the market, but let's just subtract what's been going on in the market here for an instance, and just kind of discuss everything overall, right?
Yeah.
I know you touched on it, so we'll obviously come back to it, and I'll state my opinion on it. You can't look at the market without looking at the man himself and what his logic is behind this, right? We saw him come out, I want to say about a week ago, 2 weeks ago, when the Saturday Night Live do their bit. Not this past weekend, the last past weekend, so it would have had to be 2 weeks ago.
Yeah.
Where he came out and he showed that billboard, right? This is how we're going to implement tariffs on countries. And people quickly divulged that, you know, that's basically their trade deficit to each country.
That's
right?
not tariffs, yeah.
Yeah. And for people that don't know what that a trade deficit is, it's basically, you know, kind of what we buy from you and what you buy from us. That's the difference in percentiles. And yes, it makes sense. When you're a richer country, you're going to buy more than a poorer country. Just logically makes sense. If you have more money than I do, you're going to eat out more than I will, right? Logically, just logically speaking, that's the way it works. And obviously, the United States, like, let's not act stupid about it, is one of the richest countries in the world and can afford to purchase more goods than other countries can. And that's where the trade deficit came into place. And so his logic to tariffs is a bit misconstructed in the sense, and he's trying to show where these numbers come from and how he's imposing them. And I guess his logic is, we're going to impose tariffs to make up the trade deficit, which I guess is logical in his mind. To me, I'm processing that a little bit differently because it doesn't make sense. Nothing he's done this week, past month, past 3 months, past currently second term has made any sense to anybody. Ask any economical expert anywhere, and they don't understand his motives or his motivation behind this. We saw that pretty early on with the imposing of Canada and Mexico, right? And at least that had some common sense behind it. Not, granted, no facts to back it up, but like had some common sense at least. Was like, all right, Mexico, we're putting a tariff on you because we want stricter border policies to be put in place. Was there any proof that Mexico had, you know, a worse border patrol than it did 10 years ago, 15 years ago? No, but at least you can see where he came up with wanting to implement a tariff, right? And then same thing for Canada. We're implementing a tariff on you because of the fentanyl coming across the border. Granted, I don't think anybody fully understood what the fuck that was about. or anybody really made the calculation to see what the percentage of fentanyl was coming from Canada into the United States and how much drastically that changed. And basically to tell Canada, like, hey, the reason why we're doing this is for you to implement stronger border policies on fentanyl crossing into the United States. So you could kind of look at that and go like, oh, okay, that makes some sense, right? All right, it's a negotiation tactic to get you to the table and to negotiate what you want, right? Stronger border patrol policies. Okay, makes sense. No problem. And then the whole stuff with the 51st state coming out and how much, I guess, I mean, being Canadian myself, how much, pisses us off to hear. And then how Americans don't understand why Canadians are mad or are frustrated in that retort that they kept using, right? And kind of using it as a butt end of a joke. Like, oh, our 51st state, Canada, our Governor Trudeau, or I guess Governor Carney now, right? And what that implemented and why Canadians were booing the national anthem at some sporting events, most notably the Four Nations that took place in the end of February. And we saw how Americans don't want to look at that, but if you flip the book on the other end, right, you see just how egotistical some Americans were in that statement. And not to get political on the agenda, but to move forward with the tariffs, then tariffs started to come out more against the EU. Um, Tariffs came out more against India, actually, just globally at this point. He was giving out tariffs like Oprah was giving out free
Free iPads. Free
iPads under the people's chairs. You get a tariff, you get a tariff, you get a tariff, and a lot of these tariffs were given with no real justification behind them, and that's when you kind of saw the plot being lost more and more and more and more and more. And I feel like I'm giving a history lesson on what has transpired over the last couple of months.
But it's important too. It's important too.
Yeah.
Right?
And then kind of getting to where you're coming at, right? The implementation on China. China saying, hey, fuck you. We're going to implement this percentage of tariffs because you're tariffing us. And then Donald Trump was like, well, I'm going to tariff you even more. And China was like, I'm going to tariff you even more. And Trump's like, well, I'm going to raise it again. And China's like, do it one more time and we're just going to just stop trading with you altogether. And that threat clearly shook something in Trump. I think before it's like, like when you're at the play park, right? And it's like, you're it, until somebody gets really fucking pissed because you shoved them into the sand.
Okay.
Like, you know what I mean? It's basically that. And let's be honest with each other. The markets didn't take as much of a hit until the back and forth with Jinping in China. Before they were maintaining, they were stable. They weren't. They weren't, but they were still fine. They weren't overabundance. Go look at the dates.
Sure.
Go look at when the markets really crashed. They crashed in late March, early April, the moment we were going back and forth, back and forth, back and forth.
I'm actually going to pull the S&P 500.
That's fine, but I'm just stating what I'm letting you know.
No, because I disagree with you for one very simple reason. So the market started pulling back on February 19th.
No, when did they really pull back?
February 19th through...
No.
Yes.
When did they fall?
The first day they actually fell by a total of 1.4% to 2% was on February 21st.
And when did they collapse?
They continued to collapse all throughout that week. So from week February 19th to...
And when did the volatility index
Let me finish. All the way from February 19th to March 14th, markets had pulled back 10%. Okay. Markets then slightly rebounded from March 10th to March 28th. And then from March 28th, they resumed a major drop all the way until April 10th. So really, markets extremely started to plummet around April 2nd and April 3rd, as we were heading into this Liberation Day. Actually, markets rebounded by 9% or 10% for the S&P at least on Wednesday, April 9th, when he put a pause on tariffs. And then, yes, markets pulled back a bit because of that enormous jump, but now they're basically staying steady, even though there's an enormous, for example, tariff between China and the US. Reason why they're staying steady is because Trump is backing off on a lot of promises, on a
Yeah,
lot
yeah,
of
yeah.
these tariff things.
Listen,
So that's how markets moved.
yeah. And look, I'm not disagreeing with
Yep.
your statement. There was a decrease in the market when you started implementing the tariffs between Canada and the United States. We know that. But
The
the
real
real
plummet,
plummet
if you want
came,
to
like you
talk about
said, in March,
April
late
2nd,
March.
yeah,
Yeah.
late March, early April, which is when we were approaching Liberation Day.
Yeah.
Right.
Which is where he really wanted to hit a
All the
lot of the
trading partners.
manufacturing.
All the
Yeah.
trading partners.
Which is normal. Markets are going to get hit even more. But when he started going into the trade battle with China and China was retaliating more and more, right? You can hit Canada, you can hit Mexico, right? The companies that are really affected by that isn't going to affect your Dow 500 that drastically. It's going to affect it. You're going to have little hits, but
The,
you're going to still see a decrease. Don't get me wrong. You're not going to see a gain coming out of that, but you're not going to see volatility indexes hitting the highs of COVID and hitting the highs of 2008.
well, when was the
In
first escalation that was occurring between the two countries? Because,
April, you just said it, April 2nd.
yeah, that
That's when
was
it all
when the
started.
whole tariffs got hit for every
Yeah,
single
yeah, yeah,
country,
yeah,
not
yeah, yeah.
just
But
China.
that no, not just China. I'm not disagreeing with you. I'm
Okay.
just saying China was the hugest factor in all of this because when you really look at it, and like you said, right, a
Okay.
lot of the
Oh, okay. I see
manufacturing,
what you mean. I see what you mean. Okay.
right, for a lot of these major companies of the Dow Jones, maybe my point wasn't clear, maybe we just had a
Yeah.
bit of confusion on that. But when you look at the Dow Jones, right, and look at those or the S&P 500, which takes the top 500 companies in the market, and you look at where they're coming from, a lot of the manufacturing is done overseas, is done in China, is done in places like India, is done in Taiwan. A lot of them are technological companies. Nvidia,
Yeah.
for starters, Tesla, all this type of stuff is produced over there. So if you're going to hit a tariff on that, granted, maybe the car manufacturing is done in the United States, but like you alluded to, all the components, the conductors,
Everything.
chipsets,
Yeah.
screens, all this type of stuff is manufactured over there. So putting a tariff on it is going to increase the price of goods, even if they're manufactured in the States, right? Like let's just say iPhones are built in the States, but you still need to go get the parts for them.
Yeah.
It's still going to increase the price
Yeah.
no matter what. That's the way it works ultimately.
Yes. That I agree with.
So
That I
that's
agree
where you
with.
see a massive hit in a lot of these companies because, like you said at the beginning, right? It's a loss for these companies.
Exactly.
It's
Exactly.
massive losses because then they're hoping the consumer is going to flip the bill. How much are they going to flip the bill when China's what I think what it was 85% tariff at one point before they said, look, I'm not going higher than
No, no.
this.
Right now, it's China is tariffing U.S. imports at 125. The U.S. is tariffing
Oh, it went up again.
Chinese
Okay.
import at 145, except technology imports, which include semiconductors, cell phones, laptops, tablets, basically everything like that, which is only 20%.
Yeah, but it still doesn't stop there either,
I
right?
know.
Like I
Exactly.
understand there's the technological aspect, which is huge for the S&P 500 because we know it's mostly built of
Tech.
tech companies nowadays.
Right.
But look at it at another perspective, right? Clothing brands, clothing manufacturing. Nike still hasn't fully recovered from a lot of it.
Exactly.
And their production is based in China.
Exactly. Now,
Walmart, right?
Walmart, a
They get
lot
a
of
lot.
stuff are coming cheap from China as well. Right.
That's what I'm trying to say. Companies like that rely heavily on Chinese imports,
Yeah.
these tariffs are going to be crucial. Now, for me and you, we really like not being American, right? We don't like we have our own tariffs on us, which is like fine, but it's not like 150 somewhat percent there.
Yeah.
It's a little bit lower to my knowledge,
Yeah.
but
And it's
like
only sector
10%.
specific. It's only
Yeah.
so we're getting hit like all the other countries with the board like the broad 10% reciprocal for the next 90 days and then the sector specific 25%
Oh
on
no, no, I was saying
aluminium.
no, I was mean Canada and China. The states. I mean, we'll get back into that, but
Oh, you're talking about Canada and China?
yeah, that was my
Oh,
point.
that I haven't checked. That I haven't checked how many tariffs we have, but we don't have to that level.
Oh no, it's not that high. I think it's about
No.
10% or
Yeah,
15%,
something
something
like
like that. It's very minuscule. Well, minuscule. It's whatever. But like, needless to say, I was just trying to make the point. Like, we don't
that.
have
Yeah.
feeling the implications of it because we're not American, right? So Americans, like, yeah, if you're already complaining about the price of eggs being expensive and you're importing that, and most sometimes you're importing that, what are you going to do when your price of avocados, price of, sorry,
Yeah.
apologies, price of fruits that you're importing from Mexico are going up. Your clothes are going to go up in price just generally because they're being imported. If not from China, they're being imported from Taiwan, the Philippines. They're being imported from India. Like, none of them manufactured anymore is built in the United States.
Yeah.
And the counter argument to that would be, well, let's just build manufacturing in the US.
You can't.
Okay, great idea. But just let's hypothetical universe here, right? Instead of just, being a Debbie Downer over there like you are. Uh no, but hypothetical universe, let's be
Right.
honest. Like,
Hypothetically, fine.
okay, so you're gonna move production into the United States. Fantastic. Create more jobs in America. Win-win situation, right? You're
Okay.
creating more jobs.
Yep.
You're gonna lower the unemployment rate. People are gonna have employment. Fantastic. Makes sense, right? Me
Yeah.
and you
Yeah.
makes
Yeah.
sense. Right? Creating jobs, manufacturing is done in house, probably charge cheaper because you're not paying shipping fees. You're not importing. You don't
Well,
have to pay
actually,
import goods. I'm getting to that.
okay, you get into it.
But I'm just saying, you're not paying imports, right? Manufactured in house. All right, cool. So my iPhone, instead of being $1,800, maybe $1,000. That's great. As a consumer, that sounds fucking fantastic. I like this movement. Let's do it. Make America great again. And then you start really looking at this, right? Cost of a warehouse to be built, real estate that takes up,
Machinery.
machinery that takes up, labor costs that go into that, electrical costs that go into that, basically utility costs. I should just basically say utility and not
Yeah.
list every utility costs, which are much more expensive in North America than they are in India, China,
Southeast
Taiwan,
Asia, China, all these areas. Yeah.
I'm going to exclude Korea from that because they do still
And
manufacture
Japan.
in house,
And
and
Japan as
Japan.
well.
But needless to say, so the cost of imports is significantly cheaper to a company, even with tariffs, than to build a factory, buy a piece of land, build it, pay people to come in, do all this type of stuff, deal with labor negotiations, pay significantly higher wages to individuals, maintain utility bills for what? Do you know what I mean? Where they're
Yeah,
already
of
structured
course.
in China. And granted, for a lot of them, a lot of these companies, and I think we see them more and more, and correct me if I'm wrong, a lot of these factories that are there, they build not only for Apple, right? They'll be building for
Yes.
Samsung, Apple.
So they're
So
basically third-party manufacturers, white labeled as we call them, and they manufacture products for a wider range of companies, which is how they're able, in a logical way, if you put aside how they treat workers, let's put that aside for 2 seconds. But in economics way, that's how they're able to push prices down because they're not just manufacturing for Apple. They're combining a bunch of electronics manufacturing under one house.
yeah, exactly. So the same factory that produces your iPhone could be producing your computer parts,
Correct.
for example, right?
Exactly.
So you lowering the cost of production significantly. So I think that's where some people get misconstrued it a lot. Like, yes, obviously you want to create jobs, right? That's the ultimate goal. Everybody wants to create jobs in the place they're located in. I understand that. But realistically, from a company perspective, it's unmanageable, unfeasible almost to do that, when it comes to the bottom dollar. And I think that's where the tariff spike really came into.
And even if you wanted to do that, the years that it would take you to be able, because we talked about the cost, but we haven't even talked about the time, the years it takes to just build a factory plant. I'm not saying put in the machinery, but just build it. You're looking at least a year and a half for that construction to take place.
Yeah, I
Right?
agree. Unless you have a warehouse that's already ready to go,
Right.
essentially, right?
So you're talking about many years down the line to build the machine, to build the factories, to get the machinery in there, to hire the people, to train the people to be able to start production at these elevated costs. right? That's the problem that exists right now. But here's my counter argument to all of this. You're right on everything that we've said, everything. And yes, when Trump came out and showed his little fucking board, right, on April 4th, it made no fucking sense because he was showing trade deficits and not actually how you calculate tariffs. The one thing I'll tend to say that, again, it's possible that this is a situation because it's a hypothetical, right? This person comes from a domain in real estate, okay? And I think you know where I'm going with this. The way this man always negotiated in real estate is exactly what he's doing now on a country basis. He basically went up to a contractor, told him, fuck you, I'm never going to pay you, I'm going to cancel your contract, you're going to go bankrupt so he can get better pricing, right? So he can get better deals to build his properties. He negotiated like this with banks. It's a fact that what he did is he would tend to buy properties that were negative cash flow, so essentially had way too much debt on their books. He would buy them from very cheap, throw them in Chapter 11 bankruptcy, and essentially force the banks to sit down and negotiate with them, or else they would tend to lose all their holdings, which the banks never want to do. And that's how he was able to get better pricing and turn a profit. So the idea now is, right, what if this person is using tariff as a means to get a bunch of countries on the table in order to get better trade deficits? What do I mean for the average person who's listening right now? Because we're talking about very economic stuff. But what do I mean? Think about this. You go to Costco and you buy in bulk, you get cheaper prices per product, correct?
Mhm.
What would happen if Costco did not give you a discount because you're buying in bulk? Would you buy there? Absolutely not. You'd be like, no, if I'm buying 50 tissue boxes, I want it in a discount because I'm buying in bulk. If you actually look a bit on the trade deficits that might exist with the US, there are situations and there are areas where the US is not getting a discount based on the bulk that they're buying from other countries. So, what if the tariffs that he was putting in place are not permanent, but they're a way to get people to sit on the table so he can talk about trade deficits,
Yeah,
right?
okay, I get your point, but then you would need the country to come to the table to begin with and not call you on a bluff.
Right, but most countries are coming to the table. The only country that currently has not come to the table is China. However, here's my second part of the argument. Have you been reading the news that's been coming out of China recently? So, two
Domestic
major
only
news, two major
when it
news that
comes
came
to
out.
China.
Two major news that came out. First major news that came out was that China essentially implemented what's called capital controls. Capital controls, for those of you that don't know what it is, it means the government is coming out and controlling how much money you can invest, pull out, or shift around. It's telling you you have a limit. Best example, Greece implemented capital controls, I think, in 2008 in the great financial crisis. You could not go to an ATM and pull out more than 100 euros a day. So that's capital controls. China imposed that on its stock markets, basically stopping funds and other investors from being able to sell over 6 million shares one shot in a day. That to me is a sign of weakness because they are afraid of something that's happening. Second thing that's happening, China, as you know very well, and we've correctly stated throughout the past 30 minutes, is the world's hub for cheap production. So a lot of its GDP is coming from exports. Okay. And a lot of the exports that it does head into the US. And that's a fact, right? Same reason why the US can't afford to tariff China so highly because all its broad products come from there. So inflation is going to go through the fucking roof. China right now is facing a situation where a lot of their manufacturing hubs, a lot of these industries and these plants have no business currently because their products are not being sold. So they're facing a huge situation where they could lose an enormous chunk of their GDP. Now, if you look at the rhetoric that's been coming out, China has been urging for level headedness in negotiating tariffs. Level headedness, if you read it on political terms, is basically they're saying, calm down. Let's sit down, let's talk calmly. The second thing that's been happening Xi Jinping has been running around to Europe and to Southeast Asia to find new trade deals. So I agree, I completely agree that this escalation took place and they're fighting, but we're starting to see weakness come out of China as well. China is not sitting pretty right now. They're hurting a lot. The US is also hurting a lot for another reason. This is what I want to get into here. And I kind of alluded to it. The reason why Trump is backing off on a lot of things, and we saw it over the weekend, again, tech stocks not getting hit with 145, they're getting hit with 20%. Today, he said he's possibly going to look at giving some relief for automakers. Today, Ford stock jumped 4% because there's a possibility that some pause, some relief comes. The 90-day pause on the reciprocal tariffs. Something's happening in the US that I think some people are seeing and it's being mistalked about. It's called the bond yields that are spiking, right? And that's another big conversation as to why Trump on his end possibly got hurt and is sitting down to negotiate. So I just want to gather your thoughts on those points.
Oh, for me, bond yields aren't my.
Not on
It's not
bond
my.
yields, but
It's
what I said in terms of China's weakness. We're going to get into
well,
bond yields. That's the
I'll
next
answer
segment.
I'll answer the bond yields, and I'll let you have the floor on that one more than me because I don't. I mean, bond yields aren't my forte, nor do I really understand them all that much. So I'll let you have the floor on that. But in terms of China's weakness, look, I'm not going to look at China here because China's not the one that's throwing tariffs around like they don't give a fuck. It's the United States,
Yeah.
right? So they're the ones, like we said, and they're the ones that basically run the markets. Let's call it the way it is. They are the economical power of the world. We base their dollar on every economy. Used to be the pound, and now it's the U.S. dollar. We don't trade in, Chinese yen. So I'm not going to focus too much on what China's doing. We understand that maybe they're looking for new trade routes or new trade partners as well, which is understandable, right? Because
Yeah.
there's a moment of uncertainty surrounding the United States now for the next 4 years, and how quickly that changes, and it changes on the wind, right? One moment it's go screw yourself, and the next
Yeah.
moment it's hey, let's make a deal. Um, so them looking for exterior trade partners, I think. I mean, listen, anybody would do so.
Yeah.
You're always looking to strengthen your economy as much as you can. So it's reasonable to do that. They're just doing it in a different way than Trump is. Trump is trying to bully them to the table, and Ping is trying to negotiate in a friendlier manner than tariff the fuck out of everybody. So
Yeah.
um, it's a different tactic, right? But I think you'd be stupid not trying to strengthen an economy. So I don't read too much into that. And in terms of capital control, I mean, listen, dude, this is China's thing. Um, let's be honest with one another. Majority of the wealth is probably not going to be affected by it, but ideally is because the money goes to the banks and that's how they utilize what they need to do. So capital control is there because obviously China wants to control as much as they can of the wealth to put into different sectors. I'm not going to read too much into that either, given the political communist section of China. It's the way it is and the way it functions, right? Greece, we could understand because it was an economical crisis and the banks needed funds to fund themselves out of the economical crisis, right? And if everybody pulled their money out, Greece would go into worse debt than they were at the time. So you're trying to limit how much people can pull out so your country can finance what it needs to finance to get the hell out of there, right? Uh, China, I don't think it's as dire. I think it's just the way it works more than anything, right? It's a communist party. Obviously, forcing people to withdraw less means it's more money for them to play around with and play with and utilize it. So I don't read too much into that. Um, I know you mentioned bonds, but I'll go to the flip side to it, and I'll look at the stocks and I'll look at what also could have potentially happened to that. Is it too unrealistic for you to look at and be like, yes, I think there was exterior pressure put onto him. I don't think he came to this conclusion in the middle of the night while taking a dump, watching videos on his TikToks. I think clearly somebody must have told him, like, hey, buddy, you're in deep shit. Like the markets are not, people are not happy right now, right? And I don't think majority of people look at the bond market. Majority. I'm not saying people don't. I'm just saying I think a
You're
large
right.
majority of people look more at
The
how
stock
the
market.
stock market reacts than the bond market.
Yeah.
And we both know the bond markets and the housing market usually are a reflection of what usually would come in the stock market.
What do you mean by reflection?
That whatever happens in the housing market, whatever happens in the bond market,
Happens then in
right,
the stock market.
is usually in advance to what would happen in the stock market.
In a
If
way,
you're seeing,
yes. It
right,
leads the stock market. It
yeah, yeah,
reacts to it or causes a reaction to it.
yeah, but most of, like what I'm trying to say is usually those two indexes are ahead of where the stock market is,
Yeah. Mm,
right?
yeah.
So most of the time, people can predict whether we're going to be in a bullish market or a bear market, depending on how people are reacting to the housing market, to how people are reacting to the bond market, right? And then you can kind of make a prediction within X amount of years. The markets are going to fall, they're going to go bear, or they're going to go bull,
Correct.
right?
I agree
And
with that. Yeah.
generally, that's an index that's about 2-3 years ahead of time.
Yeah.
So it always takes, the stock market's usually the last one to react to anything that changes.
Correct.
Um, so would it be too unrealistic for anybody here to just assume for one moment that maybe the S&P 500, maybe the top tech guys, maybe all of them got into Trump's ear and told him, hey, if you go through with this, right? Because at this point in time, right, he put a pause to all trades, all tariffs except for China, right? And then all of a sudden over the weekend, that very quickly changed.
Correct. Yeah.
I think me and you were talking Thursday where it was like, I'm going to tariff you. No, I'm going to tariff you. No, I'm going to tariff you. No, I'm going to tariff you.
Yeah.
And then Friday, how quickly that maneuvered away,
Yeah.
right? Towards the end of the day where we saw that bump in the market.
Yeah.
That being said, at the same time, it's also did, especially the major tech companies that we know for a fact import a lot of production from China. A lot of manufacturing companies import, actually, dude, a lot of everything in the United States imports from China. Did the higher ups basically call the president and basically be like, you are about to fuck something drastically up if you keep going with this? And Jinping is a serious individual. Is he going to put his foot down and say, we're going to stop halting trades? Because if that's the case, I'm pulling out.
Yeah.
My company can't take this risk. NVIDIA, I can't take this risk. I know we're trying to build manufacturing in the States, but F that. I'd rather go somewhere else. Like, do you think for a moment, even Elon must have told them, hey, cut your shit
100%.
because now even Tesla's like, our risk, you're big time.
100%.
Like we're trying to break into the Asian market. You're fucking us in every category.
100%.
Like,
And I think that's what happened as well.
and I think you're right too. I think a lot of banks even got into his ear and told him, dude, you're fucking with our bonds.
Yes.
Like we can't have this either. And when you look at JP Morgan, Citibank, all these top heads, right? Like basically sitting them down and be like, I don't know what the fuck you're trying to do, but Sam, it's not working.
Yeah.
Like it's not functioning at all, at all, at all. So that's where I come down to, like where I draw that point in time where
Sure.
I think it's not him coming to his conclusion.
It's people around him put him in.
It's people around him that somebody finally woke up and said, okay, enough's enough now. Here's your bottle, here's your toy. Go to nap.
Exactly.
And let the actual people run this country the way it should be run.
And that's what I wanted to allude to as well, looking at bonds, right? Because here's the thing, for people out there that might not know the relation between bonds and stocks. Bonds, essentially the value of a bond, you have two things that you need to look at in bonds. You need to look at what's called the face value, which simple terms, it's what you end up paying to buy the bond. The same way that, let's say, you'll pay $200 to buy a stock of Apple, you'll pay, say, $100 to buy a 10-year treasury bond. given a number, right? That's called the face value. The second thing you need to look at is the yield. The yield, if we make the comparison to the stock market, is like the dividend yield or the dividend of a stock. It's what the bond will pay you periodically as long as you hold the bond until it matures. And let's say if you chose a 10-year maturity bond, in 10 years. Now, the yields and face values of bonds are inversely correlated. So they move in opposite directions. What does that mean? If yields increase, bond values decrease in the market. And conversely, if yields decrease, bond values increase. How does that relate to the stock market? When stocks become increasingly risky and they start to fall, bond values and face values go up because there's more demand for bonds. You want to go to safe assets. So yields fall. If you look at the actual chart of the 10-year yield from from the 28th of March till the 4th of April, which was the day of Liberation Day, yields fell by 11%. Just to give you an example, yields falling by 11% is like the stock market cratering by 30. So you're talking an enormous collapse in yields. Yields then after skyrocketed up until, I believe, the 11th by 18%. So what does that mean? Again, remember the relationship between the two, right? If yields go up, the value of the bond goes down. But why would yields go up? Yields go up if the value of the bond needs to go down, which means people don't value the US Treasury bonds the same. Now, why does that happen? Two things. A lot of people, and I've been seeing a lot of YouTube videos saying that this is it, it's the major catastrophe in the world. If you look at the charts, yields have been between 4 and 4.7% for the past 2 years. Yields are affected by what the Central Bank of the United States does. Back in 2022, when the Federal Reserve of the United States decided to hike interest rates, it pushed yields up, which is what caused the pseudo recession of 2022 and the market pullback of 22% that we saw. You remember that? We were living through that. We were panicking.
Yeah, but I
Okay.
just want to
Yeah, go ahead.
say something,
Yeah.
right? People, everybody wants to hope we have another bubble situation where everything explodes on itself, right? And everything goes to cheap,
It won't.
right? No, I'm just saying. Everybody, like when you talk to people, right?
Yeah.
Everybody goes like, "Oh, I really hope it's this. I really hope it's that." And
It's not.
kind of like you were alluding to, right? It dropped 18%. It goes up 17%. But this isn't like I know the world's been pretty fucked over the last 10 years. Sorry, last 5 years. My apologies. Uh, COVID always counts for two.
Yeah.
Uh, but the thing is like there's justification to what's going on.
Yeah.
Right? Great Depression. There were events that led up to it, but we were still young in understanding how things functioned.
Yeah.
Right? The next big one, the bubble pop
In
of the
08.
tech boom.
Tech boom in 2000 and
Tech
then
boom.
08. Yeah.
Right? Technology was new. Nobody knew how high it was going to go. Right? And at some point, Y2K happened, or the concept of Y2K. And that burst the bubble. Right?
Yeah.
2008. Right? Giving out mortgages like crazy. And a lot of defaults. 2020. COVID. Drastic fall. I'm going to points where the volatility index was at
The
such a
VIX.
peak,
Yeah.
right? You can pinpoint to what was going on. There's always bearish markets. There's always bullish markets. But you don't get the spread that you get without third party implications imposing themselves on the markets. In this case, you have a man who looks orange, who
Right.
is apparently 6'3" and 225 pounds, according to the White House. Allegedly, call that what it is. I think it's bullshit. But but he's a third party basically playing the market himself like a puppet. That's my point of view, right?
Let me get to my point because I haven't finished.
Oh, okay.
That's why. So
Ah,
bond yields, what I was saying, essentially, if they go up, it means that the value of the bond goes down. It means people don't trust the US Treasury. And that's what we saw when Trump started doing all of this stuff in April 4th. Essentially, a bunch of people, we don't know who, we don't know if it was banks internally because of what's called a basis trade going south. We don't know if it was foreign countries in reaction to them being hit with tariffs selling bonds. But what ended up happening was the bond market found itself with more selling pressure than demand to buy the bonds, which caused yields to rise. This, in and of itself, because the bond market is at least 5 or 6 times bigger than the stock market, caused enormous panic, at least in the Treasury Department. And I think that panic is what caused people to essentially put Trump in a corner and tell him, you have to really seriously stop doing what you're doing. Because you're going to cause an implosion in the credit markets fully. And if that goes, then you're looking at mortgages going down, you're looking at credits going down and credit cards, you're looking at credit default swaps, which are an enormous part of the market, which no one looks going down. So if you think the stock market was going back bad then, if yields continue to go to shit, it's going to get 10 times worse. And that's why you're seeing this backed off. And actually, yields, since he started backing off, have tapered down about 4.62%. Now, I want to talk about the VIX as well, because the VIX is another great indicator. The VIX is the volatility indicator, which essentially is a fear indicator, right? Higher it goes, the more fear, the more volatile the market is. You're right. In all of these occasions, there was what we tend to call in the market a black swan, an event that is unprecedented. We've never seen it before. We don't know how to react to it. Okay? COVID, prime example. It's a disease, everything's shut. We don't know how to react to it. Okay? The thing with the VIX, however, it looks and it takes its information of balancing out of options contracts. Options in and of itself, they imply volatility in their value, and that's correct, but they can also be swayed heavily due to trading. So the VIX, although it gives you an idea of volatility and potentially fear, it could be highly skewed because when you enter into markets which are volatile, you enter into what we call a trader's market. If you're working with traders, they're scalping options. And that can cause implied volatility in the options to move way higher than what they would usually be, skewing the VIX up.
yeah,
So
and we knew that,
so
but
the thing that I'm trying to say is that you've seen the VIX retrace also throughout, this past couple of days as Trump has been backing down. All I'm trying to say is that we're possibly seeing him starting to cave because of pressure around him. I'm not saying because he wants to, but because you got the bond market going against them, right? And basically everybody's sitting him down there. You got the tech giants stepping in and being like, hey, you got to fucking stop. And what it seems to be, and this is kind of where I want to toss it to you to get your idea in this, what it seems to be happening is that all of this was just to get people to sit on the table. That's all it was.
no, I'm in agreement with you. I think it was to get people to come to the table, but I think it's backfired on him drastically, like severely.
Mm.
But that's it. Nobody came to the table. Nobody came. Like, what has Canada changed? Nothing. What has Mexico changed? Nothing. What has anybody changed? Now, if like I said at the beginning of this episode, right? The whole point why you're implementing these tariffs is because you want change in a specific domain, right? Whether it's maybe it's trade
Yeah,
contracts, maybe it's border patrol, maybe it's a play. It could be anything, right?
yeah,
Whatever the hell crossed his mind that day.
exactly.
What changed? Nothing changed. Nobody went to the table. Nobody said, "Oh, Your Highness, let me bow down on the shoe. Here's the 51st state." Nobody did
Yeah,
anything. They all called his bluff, unanimously called his bluff, to the point where the markets were going down, and now he has to sit there and try to
and
look face,
and
even though
backtrack and backtrack.
and back. I don't even think he's backtracking. He's backtracking, yeah, but in his head, he thinks he won.
I know. Well, listen. He's always gonna think he won. The point of the matter is,
No, but okay.
yeah.
I listen, before you cut me off. I just want to bring that part up.
Please do.
Is that not a fucking scary situation when you're sitting there and you're completely lost, yet he's telling himself, "Oh, I won this situation"?
Yeah,
Are you not worried a little bit? And I know this goes back to, well, in 90 days he can implement this again, right?
yeah,
I think this is going to be a back and forth, back and forth, back and forth for the next fucking 4 years. I think we're just seeing a glimpse of it now, because at the end of the day, he's not happy. He has to know deep down inside he got fucking fucked,
yeah. He got played.
and not by Melania.
Oh, but
That's
every
what
other world leader on the planet.
basically said, "Fuck you." And now it's like, well, what do we do? You're going to probably lose whatever negotiation you're going to negotiate with China
Yeah,
at this point, because you folded.
yeah,
It turns out you didn't have a royal flush. You had nothing.
exactly.
And now everybody saw you play your cards. What do?
You
There's
can't do
nothing for
anything.
you to do.
Exactly.
You lost. You gambled and you lost. And the thing is, you should have never gambled to begin with, because now Canadians view you differently.
Europe
The
views
whole
you.
world views you
Exactly.
differently. And now the question is, when you finally come down to have that negotiation with other countries, who's going to negotiate?
And
Like we
how?
alluded,
And how?
and like we saw, right? We saw the breakdown? We know how much they purchase from other countries
Yeah.
compared to what's given to them. Now you really have to ask yourself, did you really do the right call? And I don't think he did. And we're going to see that, maybe not now, but
In
if he
six
makes
months,
it,
1 year,
yeah,
we're gonna
yeah.
start seeing the results of what happened now. And that's the thing that I want to finish up, at least on my closing thoughts. What I think we're going to see in the next couple of days is an enormous case of him backing off. And when I mean backing off, he's not going to come out and he's never going to say that he lost. The way you're going to see him backing off is doing two things. Oh, I'm sitting down and negotiating. And two, I've closed an amazing, an incredible trade deal with his country, the best trade deal ever. That's how he's going to back off. He's going to sell it to the average American as if he closed the greatest trade deal in history with whoever that trade partner is that's talking with them. That's how he's going to back off. So, at least in the short run, yes, we are going to see reprieve, which is why you're seeing bond yields fall, which is why you're seeing the VIX fall back down to 30, all of these things, right? You're right, though. I think what he's done now, it's going to rear its head. Maybe not in 3 months. Maybe he's going to start all of this again in 3 months. Maybe he won't. We don't know that until we reach there. But what I know for sure and what I'm scared is that in a year from now, we're going to realize that what he did has completely damaged the United States' position on the global playing field. And when that becomes a reality, that's when the shit is really going to hit the fan for the United States. And much less for the rest of the world. Those are my closing thoughts. I was about to say clothing thoughts. Can you tell I have dyslexia? Anyways, I want to kick it off to you because that's kind of how I see it, at least. For the short run, we're going to have some reprieve. But for the long run, the US just became a whole of a lot riskier as a country.
I mean, listen, I've said what I've had to say. I just think it's going to be back and forth, back and forth, back and forth for quite a bit of time.
Mm-hmm.
And time will tell,
Yeah.
ultimately. I don't think this is the end. I think it's just the beginning of what's to come. And I mean, just let's see what the next 4 years holds. It sounds different from podcast to podcast. There, we did one episode where we said maybe we're faithful, but 4 months later, 3 months later, changed a little bit.
And look,
So
you never know. And again, like you said, only time will tell.
so far, we're only talking about economical changes. Thank God. Could be worse.
Oh yeah.
Could be worse. So let's find out what happens.
Exactly. And look, I share the same opinions. And to you, the audience, share your comments. What do you think is going to happen? Do you really think that we're going to have some reprieve? Do you think we're not going to have some reprieve? Do you think that we're seeing the fall from grace from the United States starting right now? Or do you think this is just another blip on the radar of the United States' history? Share your comments. We're more than happy to interact with you, to discuss, and to keep the conversation going. As always, you can find this podcast on absolutely every single streaming platform out there, be it Google Play, Amazon Play, and more importantly, Spotify, which is our home. As always, if you liked what we talked about today, and if you think other people can gain something from hearing us speak on this matter, please share it, follow, and like. And as always, I've been Theo, and I've been joined here by my incredible co host, Joe. I'm going to see you on the next episode.
This has been Uncut, and thank you for listening.